Alright, what's good, Blessed Squad? So, I'm gonna let y'all know I recorded this video about 5 times and I missed like a point every single time in this video, whether it was like what it is, what a share is, what's going on here. So I wrote it down just to make sure I don't miss anything, and I just want to make sure I'm breaking this down as simple as possible, like step by step, as simple as possible, because the stock market can get very confusing, and I want this to be a simple, concise video, really just understanding what's going on in the market, what is the market, and all that. So make sure you leave a like on this video because I'm trying to make this perfect. You know what I'm saying? This has to be perfect for y'all, as well as put some comments down below if you have any questions. I will try to respond back as quickly as possible, as well as, or like make a video if I feel like it's a question that everybody needs to know or something I missed. So with that being said, let's get into the topic of today, what's going on in this video. Today we are talking about what is the stock market, and just the 101 basic, what is the stock market, what is it used for, and why you should be in the market. So basically, the stock market is a place where businesses go to sell shares, and I will break down what shares is in a second. So imagine you have a business. Let's say you are running let's say a t-shirt business. You're selling t-shirts or something, and you have your machinery, you have your employees, you have your ink, you have your building, you have your everything you need to run your business. That's what you have, and you're making money. You're making good money on what you're selling from your t-shirts, but you want to expand your business. You don't want it just to be some small little mom and pop type situation. You want to make it bigger. You want to be a Fortune 500 company. You want to make it large, super big. You just want to expand. But the issue is you don't have a lot of money to do it. So what you decide is, I don't have the cash, but I'm willing to sell a piece of my business to allow me to get the cash to invest into my business so I can expand it, buy more shirts, buy some more machines, buy some more whatever you may need. They kind of do this on Shark Tank. If any of y'all watch Shark Tank, the way people come in and pitch their business idea, and the sharks come in and say, okay, yeah, I want to buy this business. They'll take, like, let's say 30% in exchange for like $100,000. Similar to what this is in the stock market. So imagine you have your business. What you do in the stock market is you get somebody to evaluate the value of your business, the whole 100% value of your business. And what they do is divide it into small little bite-sized pieces that people can snatch up and buy. And these little pieces are called shares. So when you go into the market, you find these shares. They're shares to buy, and all they are little pieces of a business. So your Apple shares, your Google shares, your Facebook shares, they are just little pieces of a business. That's all they are. So with this in mind, the stock market is just a place, a centralized area where people can come together and buy these shares, and businesses can get the money so they can reinvest into their business. So Apple, for example, they need some more money to invest in a new Apple phone or Apple computer or something like that. So they sell shares into the market. They get the cash for those shares. People are happy because they get a piece of the company, and Apple is happy because they get more money to produce more phones or more laptops or computers or whatever they want to sell. So that's basically how the stock market works. It's a centralized area. People come together, businesses and the public, to exchange businesses and exchange money. For us, we can't specifically go in and just buy. We can't just go in and knock on Apple's door and say, I want to buy a piece of your company. You can't go to the New York Stock Exchange and knock on the door and say, hey, I want to come in here and buy some Google or some Facebook. So that's where a middleman comes in. I'm quite sure maybe y'all seen some of the Netflix films, maybe like The Wolf of Wall Street or The Big Short. Definitely recommend those videos. Super cool videos. But there's a guy on there that is on the phone all the time. I'm quite sure y'all saw the memes. There's a guy on the phone and he's talking to different customers. And what he does, his role is called the broker. He goes into the market and executes orders for the people, for you and me, that want to buy pieces of the company, which are called shares. So you call your broker, hey, blah, blah, blah. I want to set up an account. First, you got to set up an account, of course. I want to set up an account and so I can start buying some shares of some companies. He says, okay, cool. He sets it up. Once it's all set up, you let him know, like, look, hey, I want to buy 100 shares of Apple. He goes into the market, picks up 100 shares of Apple for you, and he executes that for you. And then you go in, he says, look, I confirmed it. You're now officially a part owner of Apple. And there's a lot of perks to being a part owner, having some shares of Apple. You do get, for example, Apple specifically, you do get dividend checks where they send you checks in the mail. Nothing crazy. It's based on how much a percentage of the business that you have. So if you have like a really small percentage of the business, you're not going to make that much money. But if you have a large percentage, you're going to make a lot more money. But they do send you checks. You do get to be on the conference call every quarter, like every 3 months or so. You do get to be on conference calls and be like, hey, blah, blah, I like the direction of the business, because you're an owner. You're officially a part owner of the business. So you get business ownership perks is what you get when you're an owner of the business. So these things go up and down. I'm quite sure you see in the little charts and graphs how these things go up and down in price. So these little shares, these little valuable shares, they can be range from any price. It's based on the demand of them. So they go up and down based on economics of supply and demand. So as the demand goes up for Apple, the price will go up. As demand goes down for Apple, like in the case now, the price will go down. So it's based on supply and demand how these shares go up and down. And you, of course, you want to buy low. You want to buy real cheap. Let's say you buy Apple for $100. You want to sell it at $200 so you can make $100 profit. So that's how the share system works. You're buying pieces of a business, pieces of a corporation, and you're now an owner of this business, and you make money as they go up, or you make money as they pay you the check every month, just for being every quarter, every month, for being an owner of this specific business. So it's a great opportunity because a lot of people in the Forbes, they own these stocks, they own these companies. So if you're looking to become rich, or you're looking to just have another source of income, especially like times like this, I don't recommend people just have one source of income. To become financially stable, you definitely need another source, and this is another great opportunity to do that. So with this, you don't want to be just buying random stuff, because there's thousands of businesses on the stock exchange to buy. So you don't want to buy just random stuff. You don't want to be buying garbage. We had Sears, absolute garbage. That company went out of business, and guess what happened to their shares? They plummeted. Demand went down. Nobody wanted them anymore. The company went out of business. So of course the shares are going to plummet. We had companies like Xerox back in the day. Companies gone. Blockbuster, companies gone. You want to buy good companies that you think are going to last a long time and do well. That's the goal of the stock market. So with that, you're looking at two different styles of investing. You're looking at what is called the fundamental investing, and you're looking at the technical investing. Fundamental investing is when you're buying a business based on, you're looking at what the business is doing. Do they have good cash? Do they have, are they making a lot of money for their people that invest in the business? Are they a good company? What are they selling? What are they doing? You're looking at the inside of the business and saying, okay, fundamentally, this is a strong business. I think this is going to last a long time. They're doing great things with their money. They're making a lot of money. That's what you're doing when you're looking at the fundamentals, called fundamental analysis. Technical analysis is when you're looking at charts, patterns, and the price. So that one is one I do mainly. That's the one I focus on, is technical analysis. You're looking at chart patterns and the price. So if you're looking at a stock, a company that has been moving up and down over the past year like this, and it just goes from the high of $100 and the low of $50, and it just keeps on going like this, you know a good level to buy this thing is at $50 at the low, and you know a good place to sell this thing is $100 at the high. So that's technical analysis. You're looking at chart patterns, how this thing has performed over the past year, 2 years, or whatever time frame you're looking at, to see where is a good place to buy. And it's good to marry the two concepts. So you want to buy good businesses at good prices. So you look at the technicals, okay, let's say $50 is a good level, and then you look at, okay, Apple is a fundamentally good business, so I know it should last. And that's basically how this game works. It's the brokers, it's the fundamental and technical analysis, as well as going into the stock market and buying shares. Hopefully that wasn't too complicated for y'all. If y'all do have any questions, leave them down in the comments. I try to keep it as simple as possible with a couple examples. Definitely look up technical analysis and fundamental. I am also going to be doing more videos diving deeper into the fundamental analysis, exactly how to do that, as well as the technical, expert technical. I love the technical side of it. And as well as I'm also going to be doing a video on what style of investor you should be based on your time horizon and what you think you should expect out of the market. So if you like the video, make sure you spam the like button. I'm working hard on this, and also give me some ideas down below. Don't just ask some questions. Give me some feedback. Give me some ideas of what you all want to see next, because I'm going to try to knock that out as much as possible. We're going to have videos coming pretty much once a week. I'm going to try to get myself on a schedule, probably like every Friday, I'm thinking. Don't hold me to it. I'm going to try to do it like every Friday, though. But for y'all, thank you for watching. Stay blessed. And I'm going to see y'all in the next one, man. And of course, Bless Squad, you know? All right, I'm out.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.